Thanks for joining us on Power Lunch. This is Bloomberg. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get straight to the headlines. The Indian markets trade higher on Friday. Nifty and Sensex hit lifetime highs, following record highs hit across US indices as well.
Indian Overseas Bank surges as much as 10% after the bank announces its plans to adjust losses of nearly 7,000 crore.
Idea Cellular gains as much as 12% after the promoter makes a commitment to pump in 3,250 crore.
Bloomberg Commodity Spot Index hits a 3-year high as manufacturing activity picks up across the world.
Along with those stories, a bunch of conversations coming up on the show. We talk commodities with Peter McGuire. We get another view on Indian Overseas Bank's attempt at a fresh start, this time with Saswata Guha of Fitch Ratings. And we'll talk about Trump's decision to suspend all security assistance to Pakistan with Neelam Deo of the Gateway House.
But first, let's take a look at how the markets are faring this afternoon. Neeraj is here with the markets that have hit yet another lifetime highs, and the momentum seems quite positive.
Yeah, so it's no big bang rallies, but we're having these small spurts of 0.25%, 0.5% almost every single day, and that continues. Even the broader end of the spectrum today must bring up the mid caps and the small cap indices in today's session. And there's a bit of a deviation from what we've seen over the last 2 or 3 sessions, wherein we've had those 1% upticks the last couple of days. In today's session, while we started off well and went up higher too, just come off a little bit, but no alarm bells as yet. Volumes par for the course. Remember, the cash volumes in the first 4 days, we've had at least 3 sessions wherein the volumes on the cash side are substantially higher. In today's session, already 23,000 crores on the NSE cash. Should we nudge above that 32,000, 33,000 crore mark, then that's substantially high volumes for almost all of this week, which is quite remarkable really on the cash side. The F&O volumes, of course, are a bit soft in today's session for now. What's moving? I think across the board, even autos have started to have made a bit of a comeback today. Certain private banks like Yes, for example, seem to be doing okay, though it's not the Nifty bank which is leading the charge higher. But look at Yes Bank, up 6%. Bharti Airtel, Adani Ports. And again, one small telling feature in the last 2 sessions or 3 sessions has been that it's not a clutch of stocks which are having this 0.5%, 1% rally. There are these stocks which are having 2.5% kind of gains, and some delivery-based buying that we're seeing in select names too. So that is a good thing. And Darshan did this small piece in the morning wherein we were looking at, although it's early days, but 4 days of data that has come out, and what's really seen buying. And old economy-facing names have clearly been the winners this first 4 days. And today we're seeing that evidence in cement. Take a cement name, large, mid, small, unless it's an exception. You have some very good gains coming in for the cement names as well in the session today. So from a pocket which is standing out in trade, I think cement remains that top draw today.
All right, and I think Darshan will detail that in the second half of the show. But Neeraj has picked up an interesting data point as well. While brokerages are generally cautious on the headline indices, the Nifty and the Sensex and their targets for those indices, but they're not exactly cautious about some of the index heavyweights. Interesting dichotomy there. Neeraj is detailing it for us. Neeraj.
Yeah, thanks, guys. So it's just a simple math that came out because I was just looking at reports which said that they have a lot of brokerages have a lot of reduce and sell recommendations, and I was wondering as to what the consensus on almost all the index stocks are, and therefore I dug up the Bloomberg terminal and came out with this list of the Sensex 30 names. Now, the top 50% of the Sensex weightage, this is actually 56% of the Sensex weightage, is 8 stocks, and all 8 have potential upsides which are higher than what the current market prices are. I mean, in cases of Reliance, for example, because the stock has rallied, the target price is not so high. But look at what's happened to ITC, for example. The target price is 21% higher. HDFC Twins, almost 11% higher or 12% higher. And the other set of names as well have, the top 56%, have significantly higher price targets compared to what the current price target is. So suffice to say that the market or the sell side as a consensus is bullish at least on the top 56%. Now, let me slice and dice this data further and get you what is the percentage upticks that we're seeing on some of the key weightages. So if you look at the Sensex weightage, at least 11.5% or 11.5% of the Sensex weightage, the target upsides is at least 20% higher. For about 48% of the Sensex weightage, the target upside is at least 10% higher. It could be 11%, it could be 13%, but at least 10% higher. And about 16.5% of the Sensex weightage, the target upside is at least 5% higher. So add these up, and about 76% of the Sensex or the index weightage has a target upside of at least 5%, if not more. In some cases, as I said, at least 10%, in some cases about 20%. So while there is talk of there being caution, the targets by the sell side, which is actually writing these reports, is a lot higher than what the current prices is. Remember, portfolio managers have been fairly happy with their purchases, but the headline numbers too, there is some interesting data out here. I'll just wind this up by a quick mention of 5 names, 2 of which have or potentially could be drags if the sell side targets are to be believed, and 3 of these could potentially show substantial upsides if these targets are met. Firstly, the drags. So Sun Pharma, wherein the current market price is about 576 and the target price is about 527. So that's about a 10% downside that sell side believes could come in Sun Pharma. And then the other stock, and the screen will change, wherein the consensus target price is 266, and this is for Wipro. The current price is about 311, so the target price is substantially lower. But the 3 gainers, and each of these have a 21% target upside. So be it ITC, wherein the target price is 318 versus the current price of 262, be it Power Grid or SBI, either of the two. I mean, this is ITC. Now let's get in, what are we getting in? SBI, okay, State Bank of India, wherein the target price is substantially higher than the current price of 306. This is the target price, 374. Or for that matter, Power Grid again, wherein the target price is 21% higher than the current market price. So if the sell side is to be believed, these could be the winners. But more importantly, almost 76% of the weightage, they are not seeing any downside.
Interesting. At least a minimum of 5% upside is what you want.
On at least 76%, if not more.
Okay. Thanks, Neeraj, for that. Let's move on now. The strongest manufacturing activity since the aftermath of the global financial crisis is slowly draining commodity surpluses. The Bloomberg Commodity Index hit a 3-year high as investors pour money into everything from oil to copper. And add to that protests in Iran and Trump administration threat of reimposing sanctions. And brokerage houses are scrambling to raise their oil price targets. To discuss the outlook for commodities, especially oil, amid this slow and steady recovery, Peter McGuire joins us from Sydney. He's the CEO at XM.com. Peter, thank you so much for joining us. What do you think is fueling this rise in oil prices? Brent is at about 68. WTI is trading at about 62, 62 and a half. What's fueling this higher?
Well, good morning. A couple of quick things that need to be considered. This rally's been the best part of around about a 10-week process now. Considering what we saw in OPEC on the 30th of November, the US dollar coming off as well, all of it's added to the horsepower to push crude prices higher. And then in turn, we've seen hedge funds raising their positions to the largest in history. So everyone's net long. And I think a lot of traders were expecting to see a quiet time over Christmas. And we've seen it ratchet up very, very strongly over the last week and a half.
You know, in November, Peter, when we spoke, I mean, I remember when OPEC and the other partners decided to sort of continue to pump less oil into the world. Since then, the prices have moved up. So would it be right to say that all of 2018, this bullishness is likely to continue and the direction of prices will be upwards?
I've got to say, over the first quarter to 2 quarters, I think you'll probably see that momentum move higher. I don't know, as far as a headline number, we may see through $70 for Brent, and WTI might be, a $65 trade, 66, 67. The momentum at the moment is certainly pushing higher across the whole commodity sector. Agriculture has been sold off a little bit, but everything else, base metals and energy is one-way traffic. So I think that at the present time, you'd have to stay long. Let's see what happens come April or May. And then you've got that other OPEC meeting I'll be attending in mid-June in Vienna. So as far as an extension on these cuts, we may see an extension, or we may have eaten into that overhang. But I'm keeping a very close eye also on US shale.
Peter, typically what has happened in the past in these commodity cycles is that the first move up happens on the basis of, demand supply expectations. So it's the fundamentals that are pushing up the prices. And then the speculators pile in, and then the prices sort of start to go, well beyond fundamentals. We're currently still in the first phase, though, right, on this adjustment on commodity prices?
You know what? I reckon this is just an extension of 2001. These markets run 23 to 30-year cycles. This one will be a longer one, considering China and India coming into the picture and emerging markets. This might be a 35-year cycle. I've been saying this for a number of years now. There is no way that this commodity cycle is over. We're just going through a retraction phase, very, very lumpy. You talk about volatility, and the crude market was sold off. We saw the GFC, what impact that had. We saw everything coming off. And now it just seems to be, gaining momentum. I'm not saying you're going to see $100 crude or $12,000 copper, but certainly in the short term, it's looking stronger, and I think that will continue in the 2020s.
Okay, I just want to bring up one chart from the Bloomberg terminal, and this is a chart of the WTI in comparison, and this is a timeline of about 3 years, 2015 to 2018. If I can just pull up the chart on the screen just to make a point. WTI is trading at 3-year highs. This is exactly what prices were way back in May and June of 2015. Peter, my question is, many analysts are now saying that from a technical standpoint, these prices have not moved up. So you're unlikely to see momentum in the near term. So what price levels will we be watching out for in the next 3 months?
I think it's got to be a $65, $67 US WTI. Brent will probably through 70. And you're putting your mind back 3 years, but you can go back further. You go back 10 years, and crude was sitting at $100 a barrel. I was there in NYMEX on the middle of June or early July 2008 on the NYMEX in New York, and the thing was trading at 143, 145. So, there's plenty of upside. You've got US dollar weakness, and I think that you've got to continue. Tax cuts coming into the US, what President Trump's going to do as far as and of course the Fed. If the Fed don't raise rates soon, then I think that's going to cause further weakness for the US dollar, and in turn, that's going to push crude higher.
That's what it comes down to, right, Peter? This is all a dollar story, and when the dollar reverses, whether it is on EM currencies, whether it's on commodities, isn't it largely about that?
To some extent, yes, you've got to say that it is US dollar led, but there's also the demand picture, and that's not going away. Whilst we talk about, new age technologies and electric vehicles and all of that, the growing consumption across the better part of the planet is catalytic converters, diesel engines, motorbikes, cars, you name it. We all need fuel, and that OPEC overhang. And as far as the production coming out of the States, there's stronger for longer. We're going to be 100 million barrels a day in the next couple of years as far as production. We're sitting at that early 90 million barrel market. And the storyline really doesn't change. So I think from a consumption pattern and from behavioural, we're addicted to crude oil. And unless we see something radical happen in the next 10 or 15 years, but electricity consumption, everything needs energy. And that's where the real underlying, I think, power to this particular market is at the moment.
All right, Peter, thanks so much for that. Appreciate you taking the time to speak to us. The oil story, critical for India as we go into the next fiscal year. We've had the benefit of low oil prices for a couple of fiscal years. The government has had the benefit of it. If that turns, it just adds to our macroeconomic